Thing that just came out on the Delta Exchange. They now have calls and puts on many different cryptocurrencies. I've never seen this before. I think it's pretty cool. So let's dive in. Hello traders. All right. Like I had said, let's dive in. So these just came out actually yesterday. So these are very, very new. Let me show you guys a little bit of what they are. So if you look here, you can see that Delta already has move contracts. We have move contracts for four different cryptocurrencies. We being not me, because I'm not affiliated with the exchange, but the exchange has Bitcoin, Ethereum, BNB, Binance Coin, and Chainlink. And those four all have move contracts. But which also just got added are daily puts and calls for every single one of those cryptocurrencies, so all four of them. This I found is, I think, even better than move contracts. And for those who don't know what an option is or what a move contract is, a move contract is just either when you, if you buy a move contract, you're buying a call and a put. You're buying a straddle. And if you short a move contract, you're shorting a straddle. You're selling a call and a put. But when you just have like a call or a put here on BNB, if you buy the call, then you're just buying a call. If you buy the put, you're just buying a put. All right, so let's go first look at this call on Bitcoin. It's actually quite cheap. So you may be wondering, okay, so what does this mean? What's the risk reward of this? That's exactly what I'd be asking. So there are three factors you must look at before you trade any put or call anywhere, especially here on Delta. Look at the strike price, look at the traded price here, and then look at the time till expiration. These three are very, very important. And a simple way to calculate your break even, which you should be doing as well, is you're going to add the traded price to the strike price. It's that simple. So if I buy one of these calls, I need price. If I buy, like, let's say at 33, right? I buy this thing at 33. Well, I need price to be above 11,019 in 17 hours, 41 minutes for me to profit. So if at expiry, this thing's trading at 11.1, then I'm going to make a fair amount of money. But let's say that the contract expires at 10,700. Well, then I would lose $33 per contract, which really wouldn't be that much compared to how much you could make. So here is a graph that I made of how much you could make. So if we buy this thing at 33, and let's say that this thing expires at 11,100, you make $81. You know, if this thing expires like way higher, you could make a lot more. Like, if this thing expires at 11.4, you make $381. But again, your loss no matter where price goes because you're longing a call is still going to be 33. So this is really the big benefit in the draw to why people like to buy calls and why people like to buy puts is the really limited risk because it's near impossible for you to blow up your account. If you have $1,000 and you buy one of these and your max loss is 33, your max loss is 3.3% of your account. But your max gain, you could theoretically double your account. That probably wouldn't happen, but like let's say in 17 hours the price is at 12K. Well then yeah, you double your account. You'd make $1,000 off of a fixed risk of 33. So now what you should be asking yourself is, or what I would be asking myself is, okay, so I know that I could buy this call at 33, and yeah, so my break-even price would be 11,019. What's the probability that this happens? What's the probability that price settles above my break-even? And the answer to that would be this. So I put in the current traded price of Bitcoin here. I know that there are 0.75 days remaining because there's 18 hours left, which by my math is 0.75 because 18 divided by 24 is, okay, now I'm like second guessing myself here. 18 divided by 24 is 0.75. Yeah, it is. And then I have the annual volatility from Deribit, however you pronounce it, Deribit historical volatility here. So when we have this kind of setup, we actually have a 26% chance of profit here, which is a lot higher than what I thought it would be. I was expecting this to be like a 10%er or like a 5% chance of profit, but we have a 26% chance of making money on this and about a 74% chance of losing money. So what that means is pretty simple. 74% of the time, if you buy a call with all of the characteristics I just said in front of you, in 18 hours, you will know that there's a 75% chance you lose $33 per contract. Simple. But there's a 26% chance that you can make anything from $1 up to infinity, up to thousands of dollars off of just one contract. So that's really the beauty of buying a call or buying a put. the unlimited profit with the limited loss. And I think that this call should not be this cheap. I think that this is actually underpriced. I think it should be trading at like 40 something. But it's trading higher. So what I'd say about this is probably another big benefit of buying calls and puts is trading them before expiry. I know that's pretty popular, but that would work like this. You could actually go long on a really cheap call, such as this one, and buy it at 33. And then let's say Bitcoin goes up 20 bucks and then the call's trading at 45. You just made a $12 profit per contract that you could just exit immediately, and you'd probably make money after fees. That's a pretty simple way to do this. And the benefit of that strategy is that you have a fixed loss at $33 because that's how much you bought it for. Because you have a fixed loss, no matter where price goes, you're not gonna get hurt. You're gonna be okay. Like if price went down $2,000 and you buy a call at 33, then you're guaranteed to lose 33 bucks. It's not a big deal. But if you were to just long Bitcoin and then price goes down $2,000, you could lose everything. If you're using futures, your account could go to zero. So that's the really big benefit of these calls and the reason why I'm getting so excited about these. I think that it was a great addition from the Delta exchange, and I'm very pumped about it. So let's go look at another one that's not Bitcoin. Let's go look at a call or put on BNB, Link, or on Ethereum. So what I'm going to look for is one that has a 24-hour change of dropping. I'm looking for a cheap call. Let's see what we got here. Okay, so we have a call here down 80%. Yeah, let's go check out the BNB one. So the first thing I want to do is I'm going to calculate, well, where would this expire to? If I was to buy this at 0.185, 0.185 plus 28.195 plus 0.185 is 28.38. So I have a break even at 28.38, and the current price is about 26.77, right? So yeah, that could be one trade that I could take. It's not, I think, as good as the Bitcoin trade, but it definitely is one I could take. Let's see. And sorry guys for like the lag and like the sound of my fan. This computer that I'm using this on, you do not know how many curse words, how much I was just hurling right before this video because this computer's fan is so loud. It just, yeah. You can hear it, but yeah, my computer's just terrible, and I bought it recently. All right, so enough complaining about my computer. So basically, I was about to show you guys the payoff graph for BNB here, but I'm just going to attach all that in the link below so that you can do it yourself. But basically, to wrap up this video, I think that calls and puts are a much safer way to trade when you buy them. So if you were to buy a cheap call or buy a cheap put, your loss cannot be more than the contract size. So if it's $33, you cannot lose more than $33 per contract. If you buy 10 of them, buy 10 calls on BTC, you can't lose more than 330, 10 times 33. But your gain is unlimited. The only drawback of this is there's a lower probability of your profit. But the benefit of this is trading them before expiry, because if price goes up $100, you could close this out before expiry and make money. So that's going to be it for this video. And yeah, you can PM me any questions you have about calls, puts on these 4 different contracts, and I'll be happy to answer them.